Okay, raise of hands. How many of you have seen an adult use something like this to buy something instead of using cash? Either at the grocery store or a restaurant, or even while shopping online. Now another question, how many of you think these are all the same? Some people use credit cards and some people use debit cards, but they are completely different. In today's video, I'm gonna break down the secret world behind credit cards and debit cards and show you how to use them without getting in trouble. Welcome to Piggy Bank University, exploring money one lesson at a time. I'm Professor Ham. Now let's talk about credit. Credit is when you borrow money, you have to pay that money back at a certain time. Think about it like this. Imagine you ask your friend to borrow a video game for over the weekend. Now if you return that video game on time and in good condition, that friend will do what? They'll trust you more. However, if you don't return that video game back on the exact time or in the good condition, they might not trust you and they might not let you borrow again. A bank and a lender works the same way when it comes to money. And the way they really determine this is by your credit score. Now, a credit score is like a report card for how trustworthy you are when you want to borrow money and your overall financial habits. If you pay money on time and in full, your credit score goes up. However, if you don't pay on time or don't pay at all, your credit score goes down. Now, if you have a good credit score, it's a lot easier to get an apartment, to get a loan, and more importantly, you'll probably have lower interest rates when you're asking for those loans. However, if you have a bad credit score, it's going to be a lot harder to rent an apartment, you'll probably have higher interest rates, or you might not get approved for a loan at all. Think about it like this. A credit score is one of the most important financial tools in your arsenal. The more you understand credit and the higher credit score you have, the more opportunities you'll have, not only present, but also in the future. Okay, now let's dive into credit cards. Remember, every time you use your credit card, you're borrowing money from a bank. Now I see this visually so you can understand a little bit better. So anytime you get a credit card, that credit card is issued from a bank. Be that JP Morgan, PNC, or Bank of America, if you have a credit card, it's backed by a bank. Now let's say you want to use your credit card. Let's say you go to the store and you spend $20 on a new t-shirt and you want to use your credit card. So instead of you using your money directly to buy that $20 t-shirt, the bank actually pays the money to the store for the $20. Okay? So now they pay that $20, you're now $20 in debt to the bank. So you owe them $20. Now typically at the first of the month, you have to pay off your credit card bill and your credit card debt. You can either do that in one payment or in installments. So let's assume we're gonna do it in one payment this time. So in the first of the month, you're owed $20 to the bank, and let's say that you pay that $20. So you pay that $20 in full on the first of the month, that's it. The $20 is gone, and you pay the bank in full, and there's no extra payment because you paid it on the day that you're supposed to pay it. Now, let's say that you actually wait until the second of the month to make that same payment. And let's remember, some credit cards might come with 20% of interest. So what that 20% interest means, that if you miss the payment on the correct day, you actually have to pay 20% of the total. So for that, it's gonna be $4. So instead of that 20, you're now paying $24 in your credit card debt. So that original $20 you spent for the t-shirt now becomes $24 that you owe to the bank, and it's higher than the actual amount you paid for the item. Credit cards come with surprisingly high interest rates, and if you don't use your credit card correctly and miss a payment, you'll start actually paying extra money than what you originally paid for the item. All right, imagine this. Say you spend $100 on an item on your credit card, but instead of paying it off in full when your bill comes, you pay it off in small payments over time. Now, because of interest, that $100 payment might become $120 or $130. So instead of thinking you're paying $100, that payment's a lot higher than you originally thought. That's why credit cards are such a powerful tool, but only if you use them carefully. All right, now let's compare this with debit cards because they function completely different than credit cards. When you use the debit card, that money comes directly from your bank account instantly. There's no loans, there's no interest. If you have $50, you have $50 to spend on your debit card. However, if you have $0, you probably can't spend anything on your debit card. Think about a debit card as digital cash, because it's the money that you already own that you're spending. Okay, now let's compare the two. Credit cards, you borrow money and have to pay that money back at a certain time. However, if you don't pay that money back at the time, interest makes it more expensive. And with debit cards, you're using the money directly out of your bank account. There's no interest, there's no loans. They're both very useful financial tools, but they both require different habits. With credit cards, they require discipline and responsibility. And with debit cards, it requires you to track your spending and what you have in your account. Now let's talk about something important, debt. And debt is that money you have to pay back whenever you use a credit card or have other loans. Now, all debt is not bad, and that can be a very useful tool in your financial toolbox. Think about it as a fire. A small and controlled fire can actually be very useful in cooking and boiling water. However, a big and uncontrolled fire can burn down your house, and debt is just the same. If you can manage your debt and know how much you have, it can be a very useful tool in building wealth. Some positive examples of debt include getting a loan to buy a house, because a house is an asset and can be in your family for generations. Another good example is by getting student loans to go to college or university. These can help you get better job opportunities down the line in your career. Some examples of when debt is not cool to have is when buying new technology or things you don't actually need, especially if they come with high interest rates. Now let's go over 3 simple rules that a lot of financially responsible people live by. The first one being always pay off your credit card bill in full at the end of the month. Even though the minimum payment might seem appealing, you're oftentimes going to be paying more money from the interest that you accrue throughout the months. The second one is only make a credit card purchase if you have enough money to make that purchase in cash or from the money in your bank account. You don't want to make a purchase if you don't actually have the money to spend. And the final one is be cautious of buy now, pay later options. While they might make spending seem easier, oftentimes those payments add up, and you might also accrue interest if you miss a payment. I'm not trying to scare you about credit or debt here, but I want you to understand you have to use credit and debt responsibly and wisely. Now let's go over the big ideas from today's lesson. Credit means borrowing money that you promise to pay back. And a credit score is a report card that shows banks how trustworthy you are with money. A credit card allows you to borrow money from the bank when you're making a purchase. However, if you don't pay back the money quickly, it may make things more expensive. A debit card is spending money you already have, and debt can help build your future, but too much can also be a trap. Understanding the difference between all these different financial tools is one of the best and biggest financial lessons you'll ever learn. Now I have a challenge for you. Next time you go to a store and you see someone pull out a card and pay for something, ask yourself, is that a debit card or a credit card? And then think about what you would do in that situation yourself and which one you would choose. This has been Piggy University, exploring money one lesson at a time. Remember, save smart, spend wise, and plan ahead.